Welcome back, everyone. We are at episode 5, and we're going to talk about W-2. So as we get into tax filing season, some of you may have already filed your taxes, or some of you may be waiting for a little bit until that April 15th deadline. But I wanted to just kind of give a brief review and overview of each box in the W-2. I know that many of us who handle and process those W-2, sometimes it's just automated into the system. Other times we may or may not pay attention to every single box. And then, if something in a specific box with the box's code doesn't necessarily apply to our company, we may or may not, have to experience that. And so I wanted to just provide a rundown, especially because not only is it tax season and employees may be coming in and asking you questions, it is also the testing time for the CPP. So some of you may have already reached out there and taken the test. Others may be waiting to the deadline in April. This, of course, is the big book. If you haven't seen the book yet, of course, there's online version. This is just a part of the study portion of the book and its answers. And then, of course, there's another book that goes through all the chapters and gives you the questions for you to answer. And then the book that I just showed you is where you get the answer from those questions just to make sure you answered properly. So lots of good things here. Also, a quick little trick. But if you flip your W-2 around on the back of your W-2, does go over each box and what it really means. But whether or not you understand what that means or whether or not that meaning really applies to you is one thing. Some things may not apply to you, so you may not ever care to look over that as long as your, box 1 wages are correct. Typically, many people will follow suit with that. But let's go ahead and get started and dip into, to each box so that we can kind of just go through which means what, on those specific boxes. So as we go into the initial stuff on your W-2 is really standard, right? So it's your employer's name, your specific name is the employee, your social security number. Although this year, and I want to say it might have even been last year, your employer can also select to not show your full social security number. So a lot of times it will just do your last 4 of your social now, which I think is better suited, right? I think it is definitely, because of all the fraud and so forth. But if you did not listen to my run through of year-end checking and what you need to check for before W-2s are produced, you definitely need to go in and make sure that your full social security number is correct, right? Because you don't want to get into a situation where you go to file and then you get hit with your social security number being wrong. If your company is only showing the last 4 on your W-2, then it definitely could mean that the first couple of other digits could be incorrect. And the way for you to confirm that would, of course, be to log into your HCM provider's platform and double check that, and then also get connected with your payroll or HR representative at your company for them to help review and get that fixed. Because if you do need to file a W-2C, you want to get onto that now. Well, you want your company to at least get onto that now because it does take, weeks into months to get updated. But that way, when you go to file your accountant, or if you go to file on your own, you'll notice that all you'll need to do is just click the box to let the IRS and your state know that there's a W-2C coming so they can look for that. So those are your first couple of boxes. And then as we get into, box 1 would be your wages. Although sometimes your box 1 and then also your box 3 and 5. So 3 and 5 are your social security wages and your Medicare wages. If you have contributed to pre-tax deductions, you'll notice that those boxes are different. And so those wages would be different within those boxes. So from that stance, typically, your full compensation of wages that are in, your box 1 may or may not, reflect as high as your, social security or Medicare wages, just because there are a lot of pre-tax deductions that come into play, right? Differently from your actual, gross pay. If there are certain pre-tax deductions that shouldn't be taxed for certain taxation points. So that would explain why some of those are different. And then on your actual W-2, separate from this screen, but but in the big bulk of your W-2 page, I'm not going to show, my W-2 for confidential reasons, but it'll show like your gross pay, and then it'll show like less, and then what it's less for. So if it's for 401k or something else of that nature that your company covers on your behalf, it'll show that amount and it'll show that reason. And then it'll go into a separate line item of what's reported on your W-2 wages for you to actually see. That would go through.
Have you ever wondered what really makes a generation tick? Who gets to pick the name? And why the slang keeps changing? Don't worry, I can help. My name's Dr. Megan Grace. On #Gen Z, I share the voices and experiences of Generation Z, how they're different from other generations, what moves them, and why they do what they do. In each episode, we go beyond the buzzwords and the stereotypes to dive into real conversations and the insights that matter to making intergenerational collaboration a reality. You can catch #Gen Z on the Work to Find podcast network and wherever you listen to podcasts.
Through those specific boxes, of course, box 2, box 4, and then box 6 would show your federal income tax, your Social Security taxes that were taken, and then, of course, your Medicare taxes that are taken that we all have to pay unless you're lucky enough to be on a visa. There's definitely, those taxes are definitely required. If for some reason you don't have those taxes, unless there's some one-off that you know about your, situation, you definitely want to reach out to your employer, because those are definitely required and mandated taxes, especially Social Security and Medicare. So FICA, those are mandatory. If you played around with your federal income tax and turned those off, or if you played around with your state income tax and turn those off, just know that, of course, when you go to file, of course, that money will be owed once you file. So either way, you can't skip it. You're definitely going to have to still cover those taxes. So I always tell people, if you can, please stay up to speed on that. Of course, back in the day, I can't say that I didn't turn off my taxes, because a couple of times I definitely did, especially if it was definitely needed on some checks. It's just, you don't want to get into the norm of turning off your taxes, right? Because then it just builds up, and then at a later date, you have to pay it. And then, of course, if you're not paying it on time, then you get penalties tacked on. As you grow older, you experience that. You realize, just let them take it and just be done with it then, so that you don't have to, deal with anything after the fact. So those are your first set, of handful of boxes that are pretty standard and normal to keep up with. I will say, though, that there are certain boxes that will not include your Social Security tips and your allocated tips. So when we get into box 7 and box 8, if you're not a tipped employee, this does not apply to you. But if you are, a tipped employee, then your tips that you have claimed will be applied here. And so there's a lot in the tip industry. I mean, I'm not going to get into too deep information on that, but if you have never experienced that before, of course, we are well aware, at this stage in life that waiters, waitresses are paid a small hourly wage, right? And so they do count on tips a lot to get them up to the hourly rate per their, whether it's for the federal guidelines, whether it's for your state guidelines, to get them up to that dollar amount. And so tips are typically pretty important. There's always, of course, controversy in the news about that, whether a tip is needed or whatnot. But if you can't leave a tip, I always say leave something, just because it does affect who's serving you, but then it also the employer. Because if a waiter or waitress is not getting the tips each hour to raise them up to the rate, depending on, your state, it could potentially be different. But if they're not meeting that, then most employers are now responsible for covering what's called makeup tip. And a lot of times that is required, unless there's, different laws in certain states. A lot of times that is now required through, federal guidelines for those makeup tips to be put on an actual pay stub, right? And so hopefully, all servers are being ethical and reporting all of their tips versus downplaying the reporting and having the employer cover certain portions. And so that's also where even the allocated tips box comes from. If an employer knows that an employee made a certain amount amount of tips, right, that may have not been claimed by the actual server, then those can also be listed on your W-2 as well. So it is very critical in the serving industry, restaurant business too, that anything is recorded, right? So any type of like cash tips or any type of tips that are left on an actual card are properly recorded. So I would say from an employee stance, definitely keep track of that. And also from an employer stance, right? You want to make sure you have all of those records being kept up with. So lots of, intense, interesting stuff to go along there. When we talk about box 10, those are the dependent care benefits as well. So if your company covers any type of dependent care, separate benefits outside of, this isn't talking about like medical, dental, vision. It's definitely an added section of dependent care with your benefits that if you're enrolled in, typically those are listed there. And briefly skipping over box 12 because we're going to come back to that. But if you get into like box 13, right? So if you're a statutory employee, that would be checked off. If you have a retirement plan, that box will be checked off. If you also have third-party sick pay, so that is something that could also be covered by your employer, that could also be checked off as well. If none of those apply to you, then it shouldn't be checked off. But if it does apply to you, then you'll see checkoffs in those boxes. And then if we talk about box 14, those are definitely other benefits that your employer can cover, right? So we're talking about any type of union dues per se that they may cover. Some other ones would be like, say, disability insurance, right? So if they have covered that for you as well, any type of like uniform payments or non-tax deductibles, those are also covered as well in those specific boxes. So lots of good stuff to kind of just keep in mind if you're curious on why these boxes may never apply to you, or if you change companies and you see something different on the W-2 for this company that you did not see for your other company. That gives you, a brief little snippet and, run through of everything, but does not cover the bigger box of box 12. So box 12, I would say, has the most codes, of course, of any other box, that's listed as well for companies. So if we're sticking to maybe like box 12, you'll see different codes. So you'll see A, B, C, D, E, and then it even gets into like double digits, right? So you'll see A, B, B, D, D as well. So those are definitely most critical to pay attention to, just to make sure that those boxes actually apply to you, right? Let's get into some of those. So we go through some of the most typical would be like A and B. Those are any type of uncollected Social Security or Medicare funds on like tips, right? So those amounts would need to be recorded. And we're talking about C, that would be any type of group term life insurance that's taxable over $50,000. So if you don't have group term life offer, that's a separate insurance that's offered by employers. I will let you know if you don't have that, if you've never experienced that, up to the first $50,000 is typically not taxable, but anything beyond that is usually taxable. And so this code C, would show any type of amount that's taxable above the $50,000, right? So if your employer has covered anything above $50,000 for you, that would be listed on this document. And that would be coded to be box 12 with the code C with that amount listed there. And then D, so a code D, any type of elected deferrals for 401k. So those would include separate like retirement plans as well. Those are typically listed. So if you do contribute to a 401k plan, which is pretty standard, there's other codes for like a Roth plan, but this is specifically for your standard 401k plan. Those amounts should be listed. And it should actually match the box that I mentioned earlier that shows in the middle where it shows your like gross wages less than this amount of tax, or like the pre-tax of like 401k. And then it goes into what's reported on your W-2. It should match that middle line option, that middle line dollar amount that's listed there should also be the same as to what's listed in box 12 code D for you. And then also in box 13, that retirement plan box should be checked, right? So all of those should correlate. If one of those is missing, then you definitely need to report that to your employer to get that fixed. So we get into box 12 code E. Those are other 401k breakdowns. So code E and also code F. Code E is your 403B plan. Code F is your 408k plan. Those are different types of deferral plans, similar to like the 401k, but different types of offerings that company offered. The very same for Code G. So your 457B plan is another deferral plan for retirement, right? So those will kind of correlate behind each other one by one. And then if you have on box 12 Code H, that would be a deferral for a 501c. So basically a nonprofit, right? So that's a tax exempt organization code there. So those would be any type of elective deferrals towards a 501c. Code J would show your non-taxable sick pay. So if you have been on some type of leave, or if you've gone through essentially like a third party sick pay provider that has paid you, that has not been taxed, that will be listed on your W-2 as well. And if for some reason that's not recorded on your employer's W-2, if it's a separate provider, you should be getting something from them if your employer hasn't covered that portion, right, for you. So if you know that you have been paid non-taxable sick pay and you don't see it on the W-2 that your employer has provided, definitely go and talk to the provider that has paid you your third-party sick pay, or check in with your employer if for some reason during that time frame you were just getting paid and didn't pay attention to who was paying you. Definitely just double check that and make sure, so that way before you go to file, you have all documents, right? You don't want to miss something and then have to go back and update anything later. And moving on to Code 12, that code would be 20% excise tax on excess golden parachute payments. So you may not have any clue what a golden parachute payment is. And so that is something that occurs for typically C-suite executives when they're involved in a merger and acquisition, right? So if the company has been bought out, there are times where the C-suite will be protected in a way. I may be giving away some gems here, but you can always look this up anyways. So with these plans, what happens is when you go through, a company goes through a merger and acquisition, there are times where an executive like a CEO or a CFO will have something written into a document that it's agreed upon, an agreement, right? It's agreed upon that if they merge over to this new company and still stay in that role, if for some reason they get terminated, at some point after the transition. So say they go through a merger and acquisition and then within 30 days, the company cuts them loose. They will have a payment worked out to where the company has to cover some type of, bucket of funds. So basically like a severance, I guess you can say, but it's just a different name for this because it's when you're going through a merger and acquisition. So it makes the C-suite executive protected so that they feel comfortable to stay on with the company as you're going through this merger and acquisition. And then even after the acquisition happens, you really want to just make sure that they're still protected so that even if they get immediately terminated, they still have a package that will be paid out to them, right? So there is going to be a certain percentage of taxes that are going to be recorded here if those payments occur. And there are some companies that will still terminate a C-suite executive once a merger and acquisition goes through. But a lot of this is worked in for these C-suite executives to just, make them feel comfortable about the merger and to keep them on board. So that is something that hopefully you've not, had to go through in your career, but it does happen. So that's where there's certain dollar amounts that are recorded here for that. Code L is for substantiated employee business expenses reimbursement. So those are amounts that are, non-taxable. So that if there's that's got to be an extreme. We're not talking about, maybe like $20 here, $50 here, whatever. This would be an amount that, it would be a heavy business expense, right? That wasn't taxable. That would need to be recorded. Code M and Code M and N are uncollected Social Security tax and Medicare tax on group term life insurance over $50,000. So very similar to the other box C, right? That covered that taxable amount over $50,000. This would be the uncollected Social Security and Medicare amount on that portion over $50,000. Code P is excludable moving expense reimbursements paid directly to U.S. Armed Forces. So, of course, if you're in the military and you obviously military travels and moves around a lot, right? There are a lot of compensation that happens when it gets to that point. So these are the amounts that, you would want to have recorded. These amounts are not included on your main like box 1s, 3s, box 5s. So those are portions that are excluded and need to be still reported on your W-2. Code Q, very similar. So non-taxable combat pay, right? So that's if someone is very similar to like your normal in your world, if you're not in the military world, similar to third-party sick pay that we just talked about a little bit earlier. This combat pay is very, very similar to the same. If someone is in the armed forces in the military and has been wounded, has gone on leave, and can't work in some way, that non-taxable pay is also to be reported. Trust me, they are all in your business. You cannot get away with it. And if you think you're going to get away with it, think again. Make sure you're reporting everything on the W-2 as needed. Code R are your employer contributions for Archer MSA. So you may have not heard that. It's really, I wouldn't say really as common. It's very similar to HSA. So you probably definitely have heard for HSA in our field and what we typically work for. But the Archer portion is really for smaller businesses, self-employed companies. It's their version of an HSA, but for companies that have less than like 50 employees. That would typically be recorded on here as well. And then as we get into S, for these are another retirement portion. So any type of salary reduction contributions for 408P, which is another retirement plan. And then code T is for adoption benefits. So those are not, of course, included in box 1. But if you have gone through, any type of like adoption benefits that are offered, that needs to be listed there. Code V is your income from exercise of non-statutory stock options. So of course, if you have stock, within your company, that would need to be recorded as well. So those boxes are typically included in some of the original boxes, box 1 and box 3, but those would be also listed in their own separate code under box 12 as well, which would be code V. Code W, employer contributions, including amounts the employee elected to contribute using their Section 125 cafeteria plan. So those are their health savings account plans. So just also what I mentioned to like the Archer, how the Archer is similar to like an HSA plan. These amounts are included. So for code W, it's the employer, but it also includes the employee elected amounts that should be recorded. And then code Y is your Section 409 non-qualified deferred compensation plans. Very similar. It's another 401k plan. Just there's different qualifications to all of these different 401k plans and who they apply to. So that's another box for that. And then code Z is very similar to the 409A that we just mentioned above. So it's income under a non-qualified deferred compensation plan that fails to satisfy the 409A mentioned above. This one would be included in your box 1 as well, but it is subject to an additional portion of taxation as well, right? And then it looks like that one also includes interest. I personally have not experienced this type of 401k plan, but I know that it is included in along with all of the other 401ks that we just mentioned above. If that applies to you, that does or does not apply to you, you definitely don't need to worry about it. But if you do see that code Y listed, and if you just weren't familiar with what that really entails and you need some more insight, definitely refer to your employer, your HR and payroll person to get some more insight there. And then AA. So now we're into the double digits now that they've gone through pretty much a full alphabet here. AA and BB. So we're talking about the Roth contributions for 401k and then 403B. So your Roth contributions are post-tax. So the 401k would be like, pre-tax contributions, but Roth is offered under 401k and 403b, but it's post-tax, right? So you essentially pay the taxes each pay stub, right? Versus not paying the taxes for a 401k. So those amounts would be included AA and BB. And then code DD covers the cost of employer-sponsored health coverage. And so those amounts are not taxable. So when you're being offered benefits, 9 times out of 10, your company is paying a portion of those costs, right? Whether you're aware of it or not, typically it should be listed in your benefits review documents and what's sent out during open enrollment. Also, what would be listed when you go to enroll in your plans. So those costs would be listed in box 12, code DD. And then code EE would be your Roth contributions under the Section 457 plan. So very similar to like the 401k plans that we mentioned in the other boxes. This one is your Roth post-tax in box 12 code EE. And then code FF, permitted benefits under qualified small employer health reimbursement arrangements, right? So those would be any type of employer health reimbursements that you or your company may have arranged, whether they offer that to you, whether that's a one-off offering from them. And then code GG is income from any type of grants. So if you have received any type of income from grants, sometimes it's small businesses, sometimes it's not, those would be included. And then code 8H kind of leads into that too, any type of aggregate deferrals under those same sections, 83 code I, 83I. And then after code HH, so there's a newer one that was recently added, code II. So those are Medicaid waiver payments, right? Excluded from gross income. Those typically are seemingly to apply to any type of like home health agencies as well. So any type of workers in that field. If there is any type of like Medicaid waiver payments that are excludable, those are listed there as well. So keep an eye out on that new option too, just because you may not see it on your 2023 W-2. It may also not be in the book that I showed you earlier for the CPP, but it definitely is something that is to be looked out for, especially in this coming year. So for next year's W-2. Alrighty, so that was a lot. It took me a little bit longer to go through that than I thought it would take. I know that was just a brief run through. I did not get into, too many details about everything there because there's so much that goes into the W-2, process and what entails, and it's different for every company. I mean, standard would be, of course, your wages boxes and your taxes boxes that should be filled out. 401k at this point is pretty standard for companies to offer, but all of the other stuff could just be dependent on your situation and what your company offers and allows. So thank you all for joining me for this episode of The Human Role. Next up is a really, really good episode where we're going to talk about org charts. And I do have a great guest on for that function who is a CEO. So really, really happy to launch that in the next couple of weeks. So I will talk to you all soon.